My name is Rafael, and I am the Secretary General of the European Association of CCP Clearinghouses, and I'm very happy to be moderating this amazing panel today. First of all, I want to thank you very, very much, all of you sitting down here in the audience, because it's 9 o'clock and you're here with a full room. So that's fantastic. I almost feel like asking you to give yourself an applause. Actually, we could do that. Let's do that. So thank you very much. It is a pleasure. And we were saying, we were just chatting with the panelists that we've got 40 minutes, perhaps with a bit of extension afterwards. We've got like some buffer of 5-10 minutes after that. And we need to be really efficient, which is something that we want to discuss in the panel. So hopefully we'll be able to practice what we preach and be efficient here. I'll just briefly introduce the panelists. I think they're probably known to all of you, but to my far left, we've got Klaus Löber, chairperson of the ESMA CCP Supervisory Committee, and then he's got loads of other hats in different international in universities. And actually, Klaus is someone that has been working in the industry from many angles. He's been at the central bank, he's been at the global authorities, he's been at EU legislators, and he's been now at the supervisor / regulator. Then to his right, we've got Erika Brown, head of international affairs of Nasdaq Clearing. Someone that has been in the industry also in very different layers, trading, clearing, heading different businesses. Next to her, Barry. Barry is one of these persons that I particularly like the whole panel, but I was going to say that Barry I particularly like because he's someone that he looks really young, but everything is relative, but he's been here with me like forever. I think he's one of the most knowledgeable persons in here, and he's in this industry PostTrade, and he's responsible for PostTrade policy at Bank of England. And next to him, Loredana. Very interesting because if you look at her titles, she's an advisor, Global Regulatory Affairs at SEB, one of the clearing members. And actually, you might wonder, okay, but there's nothing on clearing there. Well, Loredana, actually, this year she's been awarded a particular prize for impact, high-level individual impact on clearing in derivatives by the Futures and Industry Association. So she's definitely someone extremely knowledgeable on this subject, and we are here, all of us, for her and for all of you users of the industry. And finally, Priem. Randy, another person with lots of hats. Randy is with the Belgian Financial Services Authority, is with IOSCO, which is the capacity in which he is here today, but he's also a professor in different universities. And he's actually one of the first person that has, to my knowledge, that has written papers about the potential impact of DLT in the post-trade space. And he actually has a panel right after, so please do stay tuned and just follow him for that panel. Right. So then you are all coming. There's some seats here. There you go. And at the front, that row is totally empty. You want to use it? Come on. So for you guys, you may have been or not in a panel with me. I always do something. I need to change, but I like it. What can I say? Well, I work for CCPs. So CCPs, one of the things they do is they incentivize good risk management. They try to ensure that no one gains the system. So I want to incentivize all of you to participate today. And to do that, as usual, those of you that have been in a panel with me before, I come from Belgium, so I've got this wonderful chocolate bar. It's really nice because this is chocolate with caramel and salt. It's like the latest fashion in Belgium. So the one person that will ask the first question from the audience when we get there, if the question is a good one, and the panelists here, they confirm that it's a good question, then you'll get the chocolate bar, right? So I'll leave it there, and we'll get to chocolate later. Right, so let's start. We've got 4 sections that we want to go through. As I said, we need to be efficient. The first one is actually on simplification, burden reduction, efficiency in regulation. So we'll get to that one. Then the second one is a very topical topic, supervision. So those of you that have been following that, is a very hot topic at the moment. Then we're also looking into perhaps the non-usual risks, like general business risks, non-default losses. And then finally, finally, we'll look into something very important for CCPs and authorities: innovation. How can CCPs actually innovate? Do they innovate? Right, so let's start with the first one. And the first one is simplification, burden reduction. This is a very hot topic at the moment in the EU, in the UK. I'd say pretty much in every jurisdiction where clearing is important, because after more than 10 years after the financial crisis, there was a lot of regulation, and now comes a time of, well, did we have perhaps too much or too little? Time to analyze, at least. So looking into that, perhaps, Erika, if I can start with you, because you are one of the, you're the representative in the panel subject to regulation as an infrastructure. One of the objectives of regulation is to try to ensure that there is a level playing field, but at the same time, this could be, against potentially, innovation and other matters. How do you see the latest proposals on regulation? Do they strike the right balance?
We're sort of indicating a potential conflict between competitiveness and level playing field.
Yeah, that was exactly the question, but I couldn't remember. So yeah, there you go. I better read my script. Yeah,
and it's a pity that that's the way it's seen. But without competitiveness, the rest doesn't really matter, right?
Yeah.
Having said that, level playing field, if we don't have level playing field in competition, then that's also then we can't compete. So we need level playing field within Europe between clearinghouses, which is what I represent, and also Europe compared to other regions. So both are equally important. But innovation, obviously, is also so level playing field is important. Innovation is extremely important as well.
Yeah.
Efficiency is important. Being able to develop new products, new services, adapting to changes in the market, obviously extremely important to be competitive. And EMIR 3 addresses this. There has, when we today or previously, when we have tried to develop and innovate, we have seen that developing new products and services, we want to be able to do that relatively swiftly, time to market wise, and we want to use a reasonable amount of resources. And there we have struggled sometimes, and EMIR 3 does address this. EMIR 3, the new regulation that CCPs are under, is attempting to speed up this innovation and approvals process to be able to launch new products. And so we're happy with that. Now that we see the more detailed regulations coming out, we are concerned that the balance between competitiveness and level playing field, it's sort of tilted a bit towards level playing field. And there's a reason for that, I think. So from our point of view, obviously, when we talk to ESMA, we're saying, please reduce the level of prescriptiveness, have more outcomes-based detailed rules and so on to make us be able to be faster and more innovative. But I think ESMA has a dilemma here, because from my understanding, the mandate of ESMA is tilted more towards ensuring convergence and level playing field, and not so much competitiveness. So one idea would be to amend the ESMA mandate to introduce competitiveness as an equally important factor to level playing field. And another idea would be to give ESMA more powers to be able to interpret and publish rulings on a more ongoing sort of ad hoc basis, rather than having everything in the detailed rules. So well, I think I'll stop there. I've probably spent my 2 minutes.
Yeah, no, that's perfect, and it's really interesting because you're really putting the finger on the key element. We're trying to provide a level. ESMA is trying to provide a level playing field for all jurisdictions in the EU, while at the same time that means more detailed regulation in general. So is that going in the direction of innovation or competitiveness? And it's really interesting because I'm tempted to, I was seeing Klaus nodding like I could give him the floor. I can give the floor to Barry as well because he's also they do have a mandate, a Bank of England innovation. But let's hold on for a minute and let's first hear from the users because all of these innovation and competitiveness of CCPs, it is for users so that we can better serve you guys. So Loredana, from your point of view, what are your wishes as a user for the clearing ecosystem to be more competitive?
Oh, thank you, Rafael. I think I have a lot of wishes, but they are very basic, I would say. So, since legislation forms the basis for basically everything we do, I think we need clear rules that are, what should I say? That are predictable to the effects. I'm talking about legal certainty. We shouldn't be left guessing what is required of us. So I think there is definitely room for improvement there. And also looking at the impact assessments when the new proposals are presented. I think they should not be tick-a-box exercises, but really be robust and meaningful, and also be when the important policy proposals are presented, they should also be accompanied by a competitiveness test, because I think that coupled with data-driven evidence, if possible, I think that would justify policy choices to give them more weight and credibility. We've been in a constant implementation mode since the financial crisis. If we've barely done implementation when it's time to have a review, and then new requirements and new implementation waves are kicking in, I think we need to strike the right balance and also have longer periods between the reviews, because that would facilitate for legislators and regulators as well to really assess the effect of the legislation and what new measures to propose, if any. But I think most importantly for us is the fact that transitional provisions are introduced at level 1, giving us enough time to implement new requirements, because at the end of the day, all we want to do is do this in an orderly fashion and be compliant. I think EMIR 3.0 could be used as a deterrent for all future legislation. We know with level 1 expected to be applied before the level 2 is finalized and has entered into force. And also, since we devote a lot of time and resources to regulatory reporting, I think there needs to be a holistic approach, not silos, a holistic approach, and streamline the requirements. And I'd like to give a kudos, and we're very thankful towards ESMA for the initiated call for evidence to streamline the reporting for MiFIR, EMIR, and SFDR. But this is just a fraction of all the reporting we do, so we would welcome a more holistic approach to other regulations as well, and that other EU institutions would follow the good example of ESMA. And I think last but not least, I think we would wish for a global level playing field to protect and promote competitiveness of EU market participants. I think in that regard we should be mindful of open market considerations and market-driven solutions. And I think I'll stop there.
Yeah. No, the market.
A lot of wishes.
No, definitely a lot of wishes, and I'm very glad to hear those because you're the user, the ones that we work for, and there's for the moment there's still a global market. So let's hope that is the case. For those of you there standing, there's some seats there. There's like 1, 2, 3, 4 there, so you can go there if you want. So perhaps turning now to the authorities, if I turn now to you, Loredana was just talking about the in the EU regulation there is this sometimes there is this level 1, and ESMA just bound by level 1, so they cannot legally do much. We just need to implement that. But sometimes it's a bit surreal because you need to implement something that depends on the level 2 legislation. So you will implement it twice, and that is totally unnecessary cost for the industry. And perhaps one of the elements that had caused quite a lot of controversy has been transparency. And on that one, perhaps before going to Klaus, Barry, you guys at Bank of England, you've also been working on transparency. Perhaps how do you see these whole ideas of transparency all the way from the CCP towards the end client through the clearing members? But also, perhaps, and this was not on the script, but I guess you'll be very happy to touch upon, it's been mentioned before by Erica, this idea of ESMA getting this competitiveness mandate. You at Bank of England, you got an innovation mandate recently. Perhaps you can also touch upon that.
Yeah, maybe I'll do that first. I can build a bit on what Erica and Loredana have been saying. So, as has just been reflected, actually, last year at the Bank of England, we were given what we call a secondary objective for innovation. So we continue to focus primarily on financial stability in relation to our regulation of infrastructures and CCPs, but we do now have a statutory objective to think about innovation, and that's been quite liberating, actually, for me on the policy side and for us on the supervision side at the Bank of England in relation to clearing. I think it's quite an exciting time to be given a secondary innovation for objective for innovation, because what we're seeing is we're having a lot of conversations now with potential new entrants to the clearing market and with the existing incumbent UK CCPs and global CCPs, particularly around some of the new products that we are seeing, where perhaps you've got something like crypto, which I know we'll come to talk about later, where we've got a different group of firms maybe interested in exposure to crypto contracts, and therefore quite a lot of innovation and new ideas coming through, either in the form of new entities wanting to clear with a slightly different population of members, or existing entities wanting to maybe convert some of these things into a more kind of recognisable form of security interest or something like that. And that's been quite fun. And what the innovation objective has done for us, and it's interesting you mentioned in the context of competition, but I think in many ways innovation is, for me, more relatable in an FMI context, because what it's allowed us to do is to think much more proactively about, challenge ourselves, which of our rules are really the ones that we feel are most important for a new entrant or a new service to be focusing on. And that, I think, is kind of key, because there are a lot of rules and requirements, as you were just saying. And those are all very, very important for clearing services that are systemically important. But when a clearing service is starting off, the innovation objective has really caused ourselves to ask, what are the things we care about? Are there different ways in which we expect CCPs to comply with the existing standards? And I think that's a really, really important way to think about these things. Myself, I'm less sure about competition directly. I find it hard to imagine a world in which we have hundreds and hundreds of FMIs, lots and lots of really active competition, everyone's edging down margin a bit. That doesn't feel like the sort of thing that I really want to see in the clearing space. So I think what we're talking about, I spend a lot of time talking about it, so perhaps it's just I've got a one-track mind on this, but is more around innovation and facilitating innovation and new ideas than about having, I have a challenge on this. I don't think anyone's expecting 50 new clearing houses to emerge over the course of the next year, and then we have a sort of competitive market. So I think it's a really interesting point. I'm really happy that you asked me about it. To touch very briefly on the other thing you mentioned around transparency, yes, I'm one of the co-chairs of the international group at CPM IOSCO, which has been working for probably a bit longer than I had hoped on developing transparency standards on margin models and the way that margin is set in response to the dash for cash and the other volatility events that we saw. And I do think it's really important to reflect on the fact that at the Bank of England, we don't consider there to be a kind of trade-off between financial stability and growth. From our perspective, having strong, stable infrastructures is one of the key components of growth. If you look at the financial crisis, it was a massive growth-destroying event. So I think it's pretty clear that we need good, strong standards, and we need a good understanding through the financial system of the sorts of liquidity demands that banks, investment managers, individuals might face in a period of stress. And that is really what a lot of the transparency work that's been going on is about. And I think that is a really important thing. I think it's worth incurring some cost to achieve that. But what we should do, of course, in what we're trying to do both at the international level and domestically at the Bank of England, where we've recently put out some proposals on this, is to build on what already exists. So a lot of CCPs already have margin model simulators. We don't need to completely reinvent the wheel there. What we need is a bit of a more flexible margin simulator so that banks and clients can actually run a few different stress scenarios. Likely the same ones as CCPs are already running on their books. It's just a matter of putting them into the simulator. But that's quite revealing for a client who maybe doesn't have time to build their own sort of black box margin model. But for people who want to, we need to have that information out there so that that replication broadly of what the margin model is doing can be done. I think that's a really, really important thing. And if we look back to the Dash for Cash, it wasn't that long ago, and the more recent sort of high volatility events, having that information out there and amongst members and clients and others exposed to margin calls in relation to clearing is really important, because at periods of stress, margin calls will go up. We all know that. What's really important is that we can all prepare for that and not have any unwanted surprises.
Yeah. Well, thanks for that, Barry. And there's currently a consultation out there from Bank of England looking into that. There's another one out there by ESMA also looking into that on the elements on transparency. And on your first point on innovation, I loved how you said that innovation, the mandate on innovation has been liberating, I think, for your for your staff. I think that's interesting. So perhaps Klaus, that gives you some ideas about the need to have the mandate that Erika was referring to, the competitiveness mandate at ESMA. But perhaps more globally, Klaus. So you've been alluded to several times, and this section was about simplification, burden reduction. You regulate part of you do part of the regulation of the industry, and you do that in a way to try to ensure that systemic risk is mitigated. So simplification of regulatory burden and mitigation of systemic risk, how can we balance both?
Thanks a lot, Rafael, and it's good to be here. And I can also see you're already a bit tense at the timing, so I try to just focus on 2 or 3 aspects. First, by the way, kudos to Barry and his lead on the transparency work. Much appreciated. As you said, it's a bit slow, so which is not your fault. We know what the global context is, but that is also the reason why on the side of ESMA we have gone forward with a publication of a consultation, because the elements on transparency and predictability of margin is key. So we decided not to wait any longer. We need to move ahead. We are sure, because we are closely involved, that we are as compatible as possible with the international direction, but I also hope that we are able to tie the knot internationally soon. Looking a bit more at the general context, and again, Barry, I like the way you phrased it, focusing on the innovation, but of course, in your background, there's also the competition angle, which can occasionally create a bit of tension. So it's a balancing act, and I think the key here is, Erika, also to your suggestion, you can look at additional complementary aspects, but I would really see it as it is formulated as a secondary notion. The key of what a regulator does is still to ensure safe and orderly markets. Without this, we don't need to worry about competition. So the primary objective is clear, but within this, and ESMA has been committed to this even before we now had the recent focus on simplification and burden reduction in a number of fields, I hope within the remit of the CCPs. Since the introduction of EMIR 2.2 with the Supervisory Committee, we have been trying to be adherent to these expectations very clearly. EMIR 3, the current wave, if I use this term, of technical standards that we are looking at, is hopefully representing this idea very clearly, because what we do is we try to streamline processes, shorten time to market. This is an overriding principle even before it is now becoming an overarching focus of the EU regulators. We are leveraging electronic digital reporting tools. One of the key elements of what we are doing now is the central database, which is a single point of reference for the industry, for CCPs to report data, both for national and for EU purposes. I have to say, it would be easier and quicker to implement these things if they would be accompanied by funding by the co-legislators. So now we have to tweak a bit, but again, we are committed to implement this as quickly as possible. But the third element which came across, in the current setup, where we have the national supervisors looking at CCPs that are domiciled in their country, the level playing field is also a key element for both attractiveness and competitiveness. And this element is something where we ensure the highest degree of possible supervisory convergence. That, by implication, necessitates in the current setup a certain degree of formality, but it is a consequence that we want to make sure that the playing field is clear, that it is understandable, and that CCPs can operate within this framework without having to worry about different interpretations to the extent possible. But the key point is, this is not to the detriment of lowering the standards on CCPs. Simplification is not, as it is used sometimes in the debate, a proxy for deregulation.
Yeah.
It is really to make regulatory processes more effective and more to the point.
Yeah. I fully agree with that. That's something that we have stressed very much from the point of view of our association. We're not talking about deregulation. Regulation, we think that it is needed because it creates a benchmark, but within the processes of regulation is what we want to reduce unnecessary burden in those processes. So you referred to regulation, Klaus. Perhaps if we turn now to supervision, so the supervisory side, there's also quite a lot of debate at the moment on supervision. For those of you that are familiar or not familiar with the way Brussels works, there is this idea now about looking into the next 5 years, and the Commission is expected to make proposals around December, and they may include something on supervision of infrastructures. So perhaps, Klaus, what do you think can be done to further enhance the current supervisory framework of CCPs in the EU? You're definitely very well placed to respond that, with the objective of further integrating markets, which is what the European Commission seems to be having in mind, and also EMIR 3 was just approved in December, and it addresses quite a lot of changes on supervision. So how does that contribute already to the supervisory framework?
Well, you put it to the spot. We are currently in the process of implementing a significantly revised and enhanced framework for CCPs with EMIR 3. This entails a lot of elements. To some degree, it's also a paradigm shift. And of course, from a very selfish perspective, being in the process of implementing this really intense change, whilst at the same time having a debate on can we again move to a different area, is occasionally a bit distracting. But it is what it is, and it is necessary to discuss about a few elements. What EMIR 3, the approach, has chosen is basically full supervisory convergence through really intense convergence tools. Mm-hmm. We have a supervisory committee which under EMIR 3 basically revisits, reviews each and every key decision taken by national supervisors. That is workable to ensure the highest degree of convergence, but it comes at a very high cost in terms of process. Because you have a layered process, you have to invest resources both nationally and at the EU level to look at processes at several layers. So again, you can look at this, is it the most efficient setup? And to very simplistically put it, we now have 14 EU CCPs in 12 jurisdictions. It's a very specialized area which requires very specialized supervisory expertise. We have very good supervisory teams in 12 NCAs, national supervisors, which at a maximum supervise 2, in most instances just one entity. I leave it to you to judge how effective this is, but the key aspects that we need to look at is, as a result from the crisis, how can you ensure that you have a holistic perspective across the clearing ecosystem? And it's not just the CCP. They have a high commonality of clearing members and a high commonality of clients, which are all interconnected. How can you ensure that you have the full picture of the risk accumulation across the sector? And for this, you need to have a perspective which straddles individual CCPs. That is the first aspect. The second point is agility. Again, it was mentioned, if you work on a basis of full supervisory convergence, by necessity it needs to be highly prescriptive. That entails a process which is not easy to adapt, and it requires also the need to put things on paper, which otherwise could be left to a bit more principle-based supervisory activities if there's a bit more centralization. I'll leave it at that. It's a wider discussion, but for clearing, I think there's a quite compelling line of argumentation.
Yeah, I see that. Well, there you go. More to come in the weeks and months to come. Perhaps if we cross the channel on your side, Barry, Bank of England. So how is the UK CCP supervisory framework evolving? Is it also in a moment of change like the EU one?
So we're going through a bit of a period of change as well. As was alluded to earlier, we're actually got a big consultation out at the moment as we move from the kind of inherited Brexit era version of EMIR, which we term UK EMIR, but actually of course is EU EMIR frozen in time, to a Bank of England rulebook. Now that's not about reinventing the wheel. We're of course heavily involved in the development of EMIR in the first place. We've been heavily involved in the development of international standards, so it's still very much in line with those. But we have been in a process of moving to a Bank of England rulebook. We're consulting on that at the moment, and alongside that new rulebook, we have some new supervisory tools and powers, and a bit more of an ability to actually adjust and make more efficient some of the supervisory processes that we run. And so that is what we're taking the opportunity to do. And I thought it was probably worth just highlighting a few pieces. It's very similar to what Klaus has been alluding to, and the same on our side of the channel. We've got no wish to reduce standards. What we're trying to do is actually just make things a bit quicker. To Erica's point about wanting to move quickly to market. So we are also looking at margin model approvals and new product approvals, and we've been thinking long and hard about the way in which we do those actually. And really, what we've decided from a supervisory approach perspective is that we want to be much more focused on the outcomes of the margin model, and to be looking at that through our kind of thematic supervision rather than doing approvals of individual margin model changes. So we have introduced a material non-material distinction in relation to margin model changes, and we're actually not planning to look at the non-material changes at all. So we've drawn a clear line, percentage of impact on margins. We set that at 15%, and there's a few other considerations, but essentially if it falls within that non-material, we won't look at it.
So there's no procedure?
No procedure at all. And that's
looking at Klaus when asking that.
I think what that will do, it won't mean that we're not looking at the margin models, but rather than look in advance, we'll look at actually what the output is rather than little tweaks and changes to them, which we hope will enable improvements, enhancements, new products to come to market more quickly. And we won't do that because of the new framework. The other thing we wanted to do was make it a bit clearer what we look at when we're doing some of these approvals, say a material outsourcing or something like that. So we've actually set out now in statements of policy, which we're consulting on, what we will look at in quite a lot of bullet points, but essentially those are all the things that we will look at when we're doing an approval, and we've set out how long we will take to do the different approvals. I think that the longest period we've said is something like 90 working days. Some of them are much shorter than that, 30 working days, and we're going to publish how we're doing against those targets each year in our annual report to keep us honest. Again, with the idea that we don't want these things to drag on, and we sometimes complain to our CCPs they don't give us the information we need. In the past, to be fair, we didn't really say what information it was we wanted. So we settled that out in a lot more detail. And as I said before, we're also thinking a lot about innovation, and we've published what we called our new firms approach. But in fact, we're taking the same approach for new firms and existing firms. It's just we haven't really articulated how we do these things before, and we're envisaging what we have termed a mobilisation phase post authorisation for a firm offering a new firm or a new service, where we actually think a little bit more about what we want to focus on, as I was saying before, for a new service while it's building out and becoming a fully fledged activity, while the volumes in it are very limited, and looking to adjust the degree of expectation that we have in terms of the way in which they comply with our requirements, which we hope again will just make it easier to bring new things into clearing.
Since that, if I recall correctly, deadline for comments is 18th of November.
It is the 18th of November.
Yes. It? There you go. So if anybody's interested, start writing. But there's quite a lot to write, to read, and then write. Right. So I'm conscious of time. As I said, we'll probably run into 10:2, which is we were allowed by the organizers. But now Randy has patiently been waiting here with all his thoughts. I was thinking of you when Klaus was talking about supervisory framework in Europe and talking about the colleges. I think you are in 6 CCP colleges, is it?
Yeah.
So,
I'm still alive.
Still alive. Right. So, perhaps Randy, with your more global CPMI IOSCO hat on. So what's on the plate for CPMI IOSCO in terms of regulation?
Yes, so we have a lot going on, but let me first take a step back. So in September 2020, so CPMI, IOSCO, but also the Basel Committee, so BCBS, published is a diagnostic report of actually what happened in March 2020 and the dash for cash. And there actually we used a lot of data analysis to actually see what was going on at a global level. And the CCPs actually were quite resilient, so that was quite okay. But of course, as expected, initial margins and variation margins increased substantially. So we still took this as an opportunity to say, okay, we don't see any major flaws. It's not that we saw defaults of CCPs or so on, but at least let's take that as an opportunity to do better. And also there were a couple of concerns, and Barry already mentioned it, is about transparency. So some clearing members and also their clients saying, we're not. It's difficult to get sufficiently prepared, also because it's not always transparent how the risk models work. We don't have any always decent margin simulators that we can play with, and so that all led to, I would say, 6 big policy recommendations. So in the end, increasing transparency for centrally cleared markets, but also getting market participants more prepared in terms of having sufficient liquidity, looking at data caps in regulatory reporting, but also streamlining variation margins both in centrally and non-centrally cleared markets, and then indeed responsiveness, transparency in centrally and non-centrally cleared markets for the initial margin models. Now, a lot of work to be done. Of course, we didn't do it IOSCO by ourselves, so a couple of different streams were created. And so first, I would say we had together CPMI, IOSCO and the BCBS, this group that looked at the non-centrally cleared markets. There in January we published a report, so together with them, on where we come up with about 8, I would say, guidance recommendations that the market can do, for instance, making sure that the ISDA SIM model is backtested sufficiently, and also making sure there are no legal and operational challenges there. So in addition to that, at CPMI IOSCO, we also published this report on streamlining the variation margins in centrally cleared markets. Again, with the whole notion of making sure that also for intraday margin calls that people are actually sufficiently prepared, that they have time to do so. Can we also, for instance, take variation margin calls, initial margin calls, can we bundle them? So there are a couple of recommendations. Of course, this is all soft law, of course, that the market can use. And then the last one is, of course, the one that Barry is chairing, is that on the responsiveness and transparency of initial margins, in which there were 10, I would say, policy proposals. I think catching the eye is indeed the margin simulator tools, making sure that clearing members can use a tool, can work with stressed scenarios. Of course, this will never be the perfect truth of what their initial margin will be, but that they can be prepared as much as possible. More information, especially on anti-procyclicality measures. We also work now very closely with CCP Global, who made this template for the public quantitative disclosure. So this is all going on. And so actually, and thank you very much, Barry, for all your very useful work all over the years, but this also had to be, I would say, implemented in and so we are going to change our CCP resilience guidance. There will be a consultation, of course not on the content, because we already consulted on all of that, but of course on how we implemented all of that. So that, I think, is the very big angle that Barry and also a colleague from the CFTC have been working on. I know it has been slow, but we know the European process. I'm with Klaus in the CCP Policy Committee. I was working for the European Council and EMIR 3.0. There you have 27 noses to put at the same way at CPMI IOSCO. You also have Japan, you have the US, you have, you name it. So the more people, the more views, and the longer it sometimes takes. But I think we're getting there. The next thing is a big topic is about third-party risk management. So in terms of the structure, and at CPMI IOSCO we have the Operational Resilience Group, which is chaired by Klaus. You see, we are all one big family, seeing each other all the time. So this has a subgroup of looking at third-party risk management, chaired by a colleague of Barry from Simon Morley from the Bank of England. And also there, at the moment, we are stock taking. So we have done already a big consultation with 27 authorities, looking at how do they look at third-party risk management. We have done a gap analysis also with the standard setting body, so the BCBS, the FSB toolkit, what comes out there. We have done a roundtable with FMIs to also listen how they look at third-party risk management, the challenges they face, and also still this month we going to do a second roundtable with the critical third-party service providers, so the Amazons, the Googles, the Microsoft of the world. Now it's way too early yet to now say, okay, this is the final outcome, this is what we will see. But there are a couple of things that in any case we see more and more cross-border outsourcing arrangements, a lot of concentration, in terms of cloud. It's not that you have thousands of players, which can lead also to vendor lock-in situations. Also, what we should focus on, and the BCBS and FSB does that already quite substantially, but of course this is broader, not for FMIs, is, I would say, supply chain. So CCPs, CSDs, they have a very good, I would say, due diligence and contract with their providers, but what about the subcontractors and the subcontractors and so on, so the whole chain. So how can we deal with that? So this is all putting on the table and is taking a lot of our resources for the moment.
Okay, there's quite a lot there coming up. It's interesting because at this point in time in the world, then I did wonder at some point, what is the role for CPMI IOSCO? Is it going to be the same or not? So I'm glad to hear that for the moment, definitely it is the same, and I hope it will be the case. Perhaps if we swiftly switch into the next section and liaison what you just said, Randy, something else that CPMI IOSCO, I understand they're looking into is general business risks and cyber risks, and I understand there is something coming up there. Perhaps, and on this section I will ask you, if you don't mind, to be a bit on the short side so that we can have the time to get into innovation and ask and get one question from the audience. So what's coming up on the general business risks?
There we will publish still this year another consultation paper on general business losses. So in the sake of time, I'm not going into the details, but there are actually three big parts on it. One is about monitoring and the management of general business risk, making sure you have frameworks in place. The second one is the minimum amount of liquid net assets that you should keep, so the minimum 6 months operational expenses, and then of course enough for an orderly wind down recovery. And the last one is then governance and transparency. So I wrote a lot of, but let's indeed, I would say, look out for our websites, what is being published, and in the break, don't hesitate to come back to me. On the cyber risk, there also one of the subgroups of the Operational Resilience group is the cyber risk group, and there actually we are working for the moment on a toolkit, giving also guidance that the FMIs can use. I'm thinking about the 2-hour RTO, how to deal with that. The management again of ecosystem risk scenarios and testing, so red team testing, threat-led penetration testing. So also we have DORA in Europe, but also at the global level. We are still in the drafting phase there, so I don't dare to commit yet or say an exact time. We do our best to have something by the end of the year, but let's see. So that is also all coming your way.
Okay, good. Very conscious of time. Very short. I'll ask the very similar question to Erika and Loredana. Erika, as a CCP, are you ready for this type of risks? And Loredana, as a user of CCPs, are you comfortable without ready CCP staff for these risks.
All right. Well, so cyber attacks, if that's what we're talking about, to take one example, or the most important example, I guess, it's one of those risks that we can't eliminate. All we can do is plan and prepare for them. And yes, Rafael, we are ready. So I mean, and we have been ready for a long time, although there are new requirements coming our way, obviously. But already in EMEA, we are obliged to have robust systems to test for cyber attacks, to recover quickly if we are attacked and the systems go down, and there are requirements around using external systems and things like that. So we've had these requirements for a long time, and we are prepared. Dora sort of takes this up another notch. I think just one point. I know we want to move on, but I think in this area, this is not where we compete. This is where we collaborate. So everyone has task forces. So each has a cyber task force, and we have collaborated and exchanged ideas and developed principles how to work, to prepare, to how to handle a cyber attack, and that's excellent. And CCP Global, where I'm also part, does the same thing, also has a cyber task force and testing and so on. Nasdaq, as a huge company, puts lots of resources. It's one of those areas where it's good to be part of a very large organisation because this requires a lot of muscle. And I'll stop there.
Okay. Loredana, are you comfortable with that?
I think, CCP manage their own risk, so they should also bear the risk. But I think we need, as a user, we need a broader understanding of practices that are used, and it boils down to adequate tools and resources, and what happens if a non-default loss should materialize, and if the resources are not readily available, or if they exceed the losses exceed the resources, or the other alternatives to bridge the liquidity gap, and also need perhaps to cooperate with CCPs and bridge also the potential transparency gaps that are there.
Okay. Good. Right, so very conscious of time. We've got 4 minutes left, and I still want to gather questions from the audience. So perhaps if, with your permission, we'll need to edit a bit on the script. So there is some information from Bank of England on these general business risks coming up. So perhaps you may want to speak to Barry about that. But perhaps I would like to pick on Barry and Klaus as well, because we are talking about regulation in this panel, but also, as we said in the beginning, about innovation. Which is what CCPs also stand for, to try to better serve their clients. Perhaps, Barry, if I can start with you, the current international regulatory framework, is it fit for innovation in clearing? We hear about repo clearing developments, about stable coins, about T+1, about DLT. Is it fit for purpose? And perhaps I would add also Klaus to chip in, and then we'll get a question from the audience.
Thanks, Rafael. As Rafael was saying, I am older than I look, and I was actually on the group that drafted the PFMIs, the original version, and indeed on the predecessor group to that. And I'm quite proud to say I think the PFMIs have largely stood the test of time in answer to your sort of prompt question. They are, of course, very outcome focused, very high level, but responding to some of these new innovations, particularly around stablecoin, around the things that we see around T+1, speeding up settlement. It's not just about having new guidance, everyone will be pleased to hear. It's also just about exchanging views and sharing experiences between authorities and between firms. And I think the greatest example of that recently actually is T+1. So in T+1, obviously we had the US, Canada, Mexico going first. We've now got the UK and Europe moving. We've had to learn a lot, actually, I think, both within the industry and as authorities from that experience. And largely the challenges around greater automation, looking at operational risk, thinking about how the workflow will fit. And that's all things that the PFMIs already cover. Something like stablecoin is a little bit different, of course, because there you've got a new product with novel attributes, perhaps a bit less price information, and that raises particular challenges for clearing, I think. But again, they're not new challenges per se from an outcomes perspective, but they are things we have to think about. And the sorts of things that we think about at the Bank of England when we're looking at this stuff is around, for example, market risk. There's definitely more difficulty modelling there. That means that there is a bit of a risk that your waterfall of resources in the CCP could be undersized. You might then see greater pro-cyclicality and volatility. So we need to think about how can you address that if there's not much price information available, these sorts of things. There's a default management challenge potentially if you're running an auction on something where perhaps you haven't got the normal participants who are prepared to bid. Maybe again, it's not easy to, it's quite a liquid market. If something goes wrong with one of these new products, could happen. Again, you need to just think about that in a clearing context. But we've seen it before where for CDS, separate default funds were set up because of the jump default risk. So these are not necessarily new things in relation to stable coins, but they do bear careful thought. And what we're seeing at the moment, I must say, both from members of CCPs and when we talk to CCPs who are interested in launching these products, and we have seen some already, particularly around the kind of securitization of crypto and these sorts of things, there are some sort of novel ideas and solutions coming out. And I think that's what we need. But I don't think the questions are new. I think it's just important to make sure that we fully think about them when clearing some of these things.
Yeah. Klaus, do you agree with that?
Of course. And I can assure you, we are following a very similar track. I will not go into details as Barry. Those who are interested see a lot of publications and papers of ESMA. Just three very short, more high-level things. First, yes, I agree. The PFMIs are up to this job because they have been crafted consciously as high-level principles. What we need to do is, on the more hands-on regulation, also nationally at the EU level, see, does it hamper innovation? Are there some elements which would impair certain developments that may be beneficial? At the same time, you need to make sure that risks are adequately covered. This is the biggest challenge. How do you treat equally those who play within the current framework and those who try to come in? And that's something where we need to reflect. Again, here the EU setup is perhaps not the most agile one, but it's an ongoing challenge. And the last element is, are we sure we provide the right guidance still within regulation to the industry? That's where the innovations, for example, in general business losses and operational resilience should be reviewed. Are they adequately dealing with risk coming from AI, from DLT, from other technologies? Let's stop short here.
So, thank you very much for joining me this morning. It's a packed agenda.